Anshul Saigal is joining us now from Saigal Capital. Anshul, good afternoon. Anshul, I wanted to discuss, a concept, a phenomena which seem to be occurring right now. Market is at the highs. People are looking for undervalued ideas. One section of the market which has badly performed is the consumption side, especially as far as your rural tier 2, tier 3 QSR. FMCG, some other consumer categories have underperformed because of inflation. Now that inflation trajectory has peaked out, do you think this under-owned part of the market can make a comeback, and what categories would you bet on?
Good afternoon, Ajay bhai. It's a pleasure to be speaking with you. Yes, you are absolutely right that this is a market where it's become not so easy as it was last year to identify opportunities. Clearly, a lot of the market has rallied quite meaningfully. And what we are witnessing in this market is quite severe sector rotation. So, if you recall, 2021 was the year of IT, and thereafter, for the next 2 years, IT actually underperformed, and only of late, IT has started rebounding. Prior to that, it was chemicals. Chemicals did very well, and then that underperformed because valuations caught up with reality. And now, of late, we are seeing some action there. Similarly, we saw underperformance in the consumption space because we had seen valuations really catching up with the earnings in that space over the last many years. And that space, as a result, and as you rightly mentioned, also because of inflation, consolidated for a 2 to 3 year period. And this may be an interesting time to actually consider looking at this space. There are obviously different type of investors and different objectives. An investor who's looking for defensives should go for FMCG kind of plays, but an investor who's looking for long-term wealth creation should look at QSRs. And there are now multiple opportunities in that space to make money over the next few years. Clearly, the per capita consumption in India is set to rise, and that should play out in QSR companies seeing greater spends, and as a result, operating leverage and margin expansion. So that's how one should look at that space, consumption.
Anshul, also, let's move on and talk about the banking space. While HDFC, Kotak, SBI, all these larger banks, be it private or public, seem to be in every fund you look at, the delta on earnings and low valuations and the change in narrative is actually happening in smaller banks, be it regional PSUs or smaller private sector. Some of the names which, RBLs, CSBs, JNK, Karnataka, all this variety seem to be doing very well and still not had made it to a lot of big portfolios. Do you think this could relatively outperform the overall banking space, the small bank category?
Ajay, if we look at the long term, say 7, 8 year perspective of the banking sector, we were in a phase after 2013-14 where the banking sector was riddled with huge NPAs. And those banks, which were more retail focused and were not the sort of held back by the NPA problem, these were banks like the private sector banks like HDFC, Kotak, etc. Those attracted maximum capital, and we witnessed upsides in their stock prices and valuations as a result. On the other hand, the PSUs and smaller banks, which were riddled with these problems, those were the banks which faced, complete investor apathy, and we saw valuations go down meaningfully. And then we hit 2020, 2021. That, according to me, was the trade of the century, where you saw most of these banks having cleaned up their balance sheets. NPAs were really on the way down. They were peak and they were coming down. Valuations were bottom, and there was no room for valuations to go down unless these banks failed. But they had gone through the toughest phase in their existence, and they had come out, of course, scathed, but not really completely impaired. As a result, in our judgment, as NPS came down, valuations would expand. That played out 2021 onwards. Our judgment is that that trade is not yet over. We are in that mid phase of that trade where NPS being down, capital being abundant, and these banks having enough growth opportunities, given that the sector as a whole is growing 15%, there is further room for either re-rating or earnings upgrade or both in these companies. So the smaller banks, in our judgment, will be outperformers going forward, as also PSU banks in the years, maybe quarters and years ahead.
Fair point. Fair point. Anshul, where else are you looking at good opportunity? Market is overlooking right now. Earnings are improving at a very faster clip, and valuation is still not got ripened.
Ajay, we believe that, of course, banking, small banks, PSU banks, that is one space where value unlocking is yet ahead of us. Pharma, which has seen multi-year consolidation, is coming out of that consolidation phase. What we are seeing is that there is, price declines in the US because Indian farmers are exporters to the US. In price declines over there have abated. As a result, ROE pressure that these companies were facing has also abated. That should be good for valuations. We are quite positive on pharma. We think that metals, the metals and minerals, that space where there has been a significant consolidation and price action, adverse price action, that is a space which may look interesting going forward. There is tremendous opportunity given the valuations are at quite attractive levels at this time. In the next year to 2 years, there may be value created in that space. And then there are ample opportunities in sector after sector, from EMS to media to defense. I see tremendous opportunity. Of course, I am not one who will say that markets will not correct. Markets may correct at any point in time, but I'm one to say that if you bear that volatility, then the money made over a 3-5 year period in these opportunities will be tremendous. I heard an adage yesterday which seemed very apt, and it kind of resonated with me. It was that if you are not willing to be poor, then you will not be rich. And what this means is that in the short term, volatility can make you poor, but in the long term, if you're willing to bear that poverty in the short term, then in the long term, you will be rich. And that holds very well with the Indian markets.
A very interesting point, Anshul. Very interesting point. I'm assuming that now you would be getting a lot of free time to travel across, meet fellow investors across the country as well, check out companies on ground, or even reading. Talk to us about how you are now utilizing some of your discretionary time better.
Ajay bhai, I'm of course reading a lot. I'm reading. I'm rereading a book called. I'm rereading a book which is written by Rappaport and Mobasin, and that book is a very interesting book, Expectations Investing. I recommend it to all your viewers who are interested in the markets to actually buy this book and read it. Very interesting book. I'm, of course, traveling a little bit, and this is travel, of course, somewhat for leisure, somewhat for work. I'm meeting companies across the country. I'm also interacting with fellow investors. Over the weekend, there was a conference which was held in Goa. I was there presenting and meeting with a whole host of investors, and it was very interesting to get diverse views on the markets and individual stocks. So lots happening, Ajay bhai, and very exciting times.
How was your chat with some of the investing community guys in Goa, which you're talking about? Basically, I want to understand what's the flavor sentiment among serious investors. Are they scared at elevated levels, some whipsaw moves coming in, or are they looking to deploy new money? The reason I ask you is that, Sandeep Tandon of Quant, I was just talking to him an hour back, and he gave a very interesting data. He told us that retail investors not only becoming large and more meaningful in India, but they are smartening up. He told me that in the last 2 days of volatility, sharp volatility in the market led by HDFC, he actually saw double the money coming in these 2 days than the average money which comes in. So you tell me, what are you picking up on investor sentiment when you meet friends across?
There is mixed feelings, Ajay. Some people are holding cash, but I would say the majority are not holding cash. Uh, what that means is that majority are not expecting a meaningful correction, while some are expecting a meaningful correction. Now, we are in a, as I like to repeat, that we are in a pond which is India, and we see what is happening in this pond. Valuations have become expensive across the board, and so we should, as a result, be cautious. Given that we've seen trends in the past that when valuations go beyond a certain level, markets correct. But if we look around beyond this pond and look into the sea, what we see, Ajay bhai, is that look at Hang Seng. It is at levels that it was trading at in 2001, no less. In the last 5 years, it is down 37%. If we look at China market, it is at levels that it was trading at in 2007. If we look at Europe, really there is nothing material that has happened there in the markets. Korea, last 10 years, it's done 1% compounded returns. So the froth that we expect in India, and as a result, the correction that we expect in India, has to be India specific. Unlikely that this froth exists across the world, and then to expect that we'll have a correction on the lines of what we saw in 2007, or even say in 2017, where most markets corrected in conjunction, is not something that either I or many investors foresee. It could be a 10-15% correction is par for the course in any bull market. That could very well happen. But given the growth that we are seeing in India, and given that there is very limited froth globally in various markets, to expect a significant cut, say 50-60%, is really an over expectation in our judgment, at least given the odds just now. And one should really focus on bottom up opportunities, not worry about the market levels, market direction. As long as we've got good companies at reasonable valuations in our portfolios, over the long term, we will
Excellent.
be, very well placed. And there is a lot
Right.
of money to be made in India.
All right, Anshul, great chatting up. Thanks very much for your time today.